The first section is assets. This section includes all the resources owned by the company, expecting that they will bring profit in the future. Cash and short-term investments are cash and short-term investments that are quickly traded assets. Total accounts receivable is a receivable, usually a short-term debt of a company, in the person of those who may be owed to the company. Clients themselves or other enterprises may act. Inventories is a term for finished goods available for sale and raw materials used to produce goods available for sale. Total current assets is the sum of all current assets, cash and cash equivalents, stocks, accounts receivable and other current assets. Net property, plant and equipment is the net worth of fixed assets, that is, all the buildings, land, furniture and other physical capital that the company acquired to conduct business. The term net means that accumulated depreciation expenses are deducted from the value of fixed assets. For example, suppose a company buys a building worth $1 million, along with furniture for $50,000. Their net fixed assets at the time of purchase are $1,050,000. However, each year the company must reduce the cost of these fixed assets in order to take into account the fact that they are worn out and require repair or repurchase in the future. Assume that in the first year, the company depreciates buildings and furniture by $105,000, or 10% of the initial cost. Then, at the end of the year, net fixed assets will be $945,000. Total assets, the sum of all assets. The second section is liabilities. This section includes all sources of cash used in the formation of the company's assets, liabilities, and equity. Saint debt and current portionality debt is the sum of all current debts of a company with a maturity of less than 1 year from the balance sheet date. Accounts payable is the amount that a company must pay suppliers for services or products that it purchased on credit. Total current liabilities is the total amount of current liabilities with a maturity of less than 1 year. Long-term debt is the sum of all long-term debts of a company with a maturity of more than 1 year from the balance sheet date. Total liabilities, the sum of all obligations. Total shareholders' equity, the difference between total assets and liabilities, also referred to as equity or net assets. It includes common stock par carry value. Usually, when issuing shares, they indicate a very insignificant value, for example $0.0001. But in this situation, the difference between the nominal value and the sale price is indicated. The amount received during the issue and sale of shares may be found in the additional paid-in capital article. Retained earnings is the accumulated net profit of a company that has been invested back in the business. Treasury stock are previously issued shares of a company that were repurchased but not redeemed. They can be sold again, redeemed, or left on the balance sheet. A company can leave shares on the balance sheet, for example, to remunerate employees or to form a new stock that can guarantee that no one else will collect a controlling stake. No dividends are paid on treasury stock. They have no voting rights, and no profit or loss is distributed on them when calculating net earnings per share. Treasury stock is deducted from retained earnings when calculating equity. As you can see, the company does not have treasury shares on the balance sheet. Liabilities and shareholders' equity is the total liabilities of a company.